The Chancellor's Spring Statement 2022. The Chancellor made a spring statement and there were some important changes to the tax system. And in this video I want to have a look at those, and in particular have a look at how they affect what directors should pay themselves in a director owned business. I've thought for some time that the best salary for a director to have is £12,570. It means that they pay a little bit of national insurance, employers and employees, but I think there's some sort of subtle reasons to make it a better place to put your salary. It gives you a slightly higher salary, and there are other reasons that make it a better place to put your salary rather than like the traditional just before you pay national insurance. The disadvantage of the £12,570 is that you do end up paying a little bit of national insurance at the end of the tax year. But now with the changes, now you don't pay any employees national insurance until you earn the £12,570. So you'll only be paying employers national insurance you'll be paying no national insurance and then paying some employers national insurance. And it is clearly now tax efficient to pay yourself at the £12,570 rate, or just over £1,000 a month. So I think that becomes clear what you should do. The other thing that the Chancellor said was that he was going to reduce income tax to 19%. So now this is sort of quite interesting for nerdy people who are interested in tax, because what that means is that corporation tax is now going up and income tax is coming down. So the benefit of having a limited company for tax purposes is being diminished all the way. And I know that for some businesses, particularly where you've got expensive cars, petrol cars, then having a sole trade or a limited liability partnership might be better, because you get the benefit of the lower national insurance starting band, you get the lower rate of income tax, and I think if you do the calculations, that balance between having a limited company is going slightly the other way. That said, I think for the vast majority of business owners with substantial profits, then I still think having a limited company is better, and better because you don't pay high rate tax on retained profits, and that is a big deal and saves people a lot of tax money. There is also, you can sneak more through before you pay high rate tax, because there's a net to gross thing going on where the income that you receive is after the company has paid its tax. So in effect you can put nearly 10,000 extra through before you pay high rate tax if you're in a limited company. So I still think that you're better in a limited company who've got substantial profits, but the balance is getting a little bit more balanced, and if there are other factors, then it might not be. So it's something that you need to look at on a case-by-case basis. So I hope that helps. I really do think that most directors will now be choosing to take a salary of £12,570, and there is obviously something in the government where they're making companies pay more tax, people who pay dividends pay more tax, and everybody else paying not as much more, or maybe even a little bit less. Thank you for watching. I do regular updates on tax and accounting issues, so if you would like to be kept up to date, then please subscribe to the channel, and if you press the like button, it helps me and the channel get to more people. Thank you.